JC, last week I told you I was buying some silver call options. You made fun of me. You said it's basically ultimately impossible for silver to rally over the near term. What made you think that? What were you seeing that I wasn't?
Yeah, and you're my boy, so like I'm not just, busting chops, but like you got commercial hedgers they're the most net short ever. Not like kind of net short or little, the most ever. Last I checked, they were net short 317,000 contracts. They have never been more short. So it's not that it's impossible to make money in silver, but man, the odds are really, really against you. And then just like you said, what did you say? You're never going to ignore the Commitment of Traders report again?
Yeah, I mean, I'm looking at price action, right? I like the little consolidation after a nice rally in both these metals. Miners were acting well. Everything else I was seeing was acting well. But the Commitment of Traders data, commercial hedgers were aggressively positioned against me. And I guess that's what I missed.
And then also remember, people are like, well, JC, how do you know that this gold consolidation isn't a bull flag, right? That was the other argument. And the way that I look at it, we're running into former support from 2011 and 2012, where we ultimately broke down in 2013. So that former support, at least the first time we get back there, we had like years of support before ultimately breaking down. And this is the first test of that. To bet that we're going to rip right through, quite frankly, I thought was irresponsible, which is why I did not think it was a bull flag. And then really taking a step back, when these things that are supposed to be bull flags do not resolve in the direction of the underlying trend, what is that telling you, right? It's telling you it wasn't that, right? So not only do I not think that gold is going to go higher and make new highs, but I think it's going to take time. And I think it's going to be more of like a process. I'm not like Mr. Cup and Handle guy or anything like that, but just think about like the big base that we've seen that every gold bug in the world loves to point out, and it is in fact there. Major base from those 2013, 2014, 2015, 2016, right? Big base, and we broke out, beautiful. Now I think it's going to be more of like a handle situation, maybe a smaller little base, and then at some point next year we break out at best. In the meantime, I don't think there's really any reason to be involved in precious metals from the long side, unless like you're just like short term, super short term, which, we're not. Like, I don't care what happened today or yesterday. I care more about what's happening in the upcoming weeks and months.
So from a weight of the evidence standpoint, it's not just that, you were bullish and everything that you were seeing from a price-only perspective was supporting your bullish thesis. You were a little bit skeptical of, us reaching that former resistance, I guess. So it wasn't just that the sentiment data, the Commitment of Traders report, was the only thing that you were seeing. It was also you weren't loving what you were seeing on the price charts.
Yeah, I mean, those had been our objectives, right? The 1500s were our price targets since last year, and those were achieved. And the reason they were our price targets was because we were going to run into former support, so that's where you wanted to be selling. So, over the last couple of months, we're like, all right, just back off of gold, target achieved. It doesn't change our bigger picture outlook, which I still think ultimately it does go up. But what does that have to do with today or this month or next month or even next quarter for that matter? I think this is a longer term play, and I just think it's a bad place to put money. I think there's much better places to put your money. So I look at it as more the opportunity cost. I'd much rather be in other places for sure. So you asked me one more thing. You asked me about the silver gold ratio. You love the silver gold ratio, huh?
I do, and I think it's at, if you look at it from a gold to silver perspective, it's at nosebleed levels. It's at historically high levels. So I think this would be a very logical or natural place for a bull market in precious metals to begin.
Yeah, agreed. And what I would also say is that if and when gold does start to rally again, and this is going to be a serious secular move, you are likely to see silver outperforming gold, right? One of the big things that was not part of what we saw in the rally in gold from the fourth quarter of 2018 was silver outperforming. We didn't see it. So we still haven't seen it. So when the gold bugs ask me, well, JC, when is it going to be time to get into gold? I think it's two things. I think it's three things, really. Number one, the sentiment can't be here, right? Can't have commercial hedgers with their biggest net short ever. So that needs to unwind some for sure. Silver needs to start outperforming gold, which it has not, right? So if precious metals, if there's going to be a bid and there's real risk appetite for metals, you're going to see silver outperforming, right? The crazy little cousin of gold. And the third thing is gold miners, right? GDX is that's been the ceiling, 31. So 31 on the GDX, if we're below that, it's a no touch, right? It's going to be a chop fest. I think when GDX is above 31, the sentiment has unwound and gold has consolidated some. I think that is, and silver starts to outperform for sure. I think that we'll know when to get involved, and I'm sure you and I will be here talking about it.
Right. No, I pitched gold on Real Vision back in April or May, and I listed out like 5 or 6 things, and those were them. Gold to silver ratio, miners, you gotta have gold, gotta have silver, obviously, on an absolute basis, acting correct, or acting, well, but the commitment to traders data is what I missed, and this is something that you've explained to me a million times over the years, and I'm still ignoring it and making the same mistake. Can you just explain to our viewers real quickly, how do you interpret that data, and what does it mean to you? Why do you focus on the commercial hedgers? Are they the smart money? How do you read that?
Yeah, so the commercial hedgers are the smart money, if you will, and the speculators are the less informed money, if you will. So just to be clear, 95% of the time, it is commitment to traders report or any sentiment data for that matter is useless. So it is useless almost all the time. The only times that we really want to focus in on a particular data point, in this case in sentiment, is at crazy extremes. Think about the rubber band effect, right? That rubber band, when it stretches, it's got to unwind. So when the commercial hedgers have their largest net short position ever in gold, that means the speculators have their largest long position. That's not the bet that I'm trying to make, is not that the speculators are going to be right and the commercial hedgers are going to be wrong at this historic extreme. Take it back to September of 2018. Gold hedgers actually hedge, right? They're never long. They were actually net long, I'm pretty sure, check my math, for the first time ever going into the fourth quarter last year. And what happened? Precious metals ripped, they nailed it. Now it's the opposite scenario. So again, to reiterate, it's not like we're looking at the changes week over week. It's only at crazy extremes, and that's what we had in precious metals last September, and that's what we've been having in precious metals over the last couple of months, just on the complete other side. So I'm not trying to get in front of that train. Just back off of precious metals, let them do their thing, let everybody get chopped up. I think there's opportunity cost there, and I'd rather be in other places, and we talk about it in these videos.
No, I think that's a great point, and I mean, the chart says it all. If you look back the past, several years, 5 years or so, whenever commitment to traders data has been at extremes, whether on the long side or the short side, it's been a really effective signal. And you see price reversing at those levels.
Bonds as well. Commitment to traders really, really helps out a lot. The agricultural stuff, for all of you out there, CFTC puts it out every week, the commitment to traders report. Check it out.
All right, we'll check it out. Guys, you can go to CFTC.com to find this data. JC, thanks. Great video. Talk to you next week.